I'm going to be explaining what ICT bias truly is and what it is not. 99% of the information on the internet regarding daily bias is just completely false. Most people are just completely misrepresenting what daily bias truly is. So I'm going to be showing you guys how to properly apply this and expose some of the lies regarding what some of these so-called educators explain as daily bias. And I'll be using some sources from ICT here. So that is my source of where I've learned all this information from, the Inner Circle Trader. The most important element to daily bias is time. So is it time for price to move? And we could use the economic calendar for an expectation of when injections of volatility will occur. Meaning, if I go to forexfactor.com, I'm going to look for medium to high impact news events. So this is the first element of time where we can expect volatility. Okay, if the daily candle is not likely to be volatile and move higher or lower to a specific price level and just consolidate, well, it's not a high probability daily bias day. So we're not really going to be utilizing that daily candle and get aligned with that, but rather be going to sub-daily timeframes for bias. So I'm looking for orange or red, high impact news or medium impact news. Okay, you could see Tuesday, pretty much the Friday this week, we had a orange or red folder news event. So on those days, right, we know that, okay, prices, we're likely to get an injection of volatility at some point where the algorithm can start to reprice higher for an imbalance or for liquidity. Monday, we didn't have it. It's not absolutely necessary. You can still frame clear low resistance liquidity run days other than high impact news or medium impact news event days. But this is a firm foundation of, okay, I know Wednesday and Friday this week, I know that I can see clear low resistance liquidity run days because we're likely to get an injection of volatility. What do I mean by that? I mean clear one-sided moves to an imbalance or a level of liquidity on the daily chart. So I know going into the week this week on Wednesday and Friday, we're likely to see something big because we have FOMC and NFP. So your first step is the economic calendar. Okay, the market is drawing towards two things. Price is either running to take out an old high or an old low, liquidity, or it's running to fill an imbalance. When it's not doing those, it's consolidating. So you have all these different theories on the internet, but if you just stick to the core principles of what ICT has taught on his YouTube channel and in the 2022 mentorship, which is that price is only going up or down for two things. It's liquidity or it's imbalances. That being said, I look for four things on the daily time frame to try and understand the underlying narrative of what smart money is trying to do. Okay, so number one, I'm trying to frame a clear run on liquidity on the daily time frame, and I'm looking for that to reprice to liquidity. So liquidity to liquidity is number one. Number two, I'm looking for a clear run from liquidity to imbalance. Three, a clear run from imbalance to liquidity. 4, a clear run from imbalance to imbalance. So it's just kind of the different variations of price moving to liquidity or to an imbalance. If you don't know what an imbalance is, it's a fair value gap. It's just another name for that because it's an area where there's inefficient price delivery. So imbalance, inefficient price delivery, fair value gap, it's all the same thing, right? So we're going to dive into what these look like on a real chart. Before we do that, some levels that I pay attention to is obviously daily liquidity pools. Specifically, I like to look at previous day highs and lows, weekly levels, previous week highs and lows, okay? Daily imbalances, weekly imbalances. So let's dive into an example of what a clear run from liquidity to liquidity would look like. Most of the problems that you're going to have with daily bias is more so waiting for the correct high probability setups and waiting for one-sidedness, waiting for it to be extremely clear that price is definitely moving from a liquidity to an imbalance, or from liquidity to liquidity, imbalance to liquidity, imbalance to imbalance. You're just waiting for a time when it's crystal clear, when everything aligns perfectly. So I'm going to show you guys what daily bias is and what it is not. This is a high probability bullish daily bias when price runs out this swing low and also this low that we have right here. Okay, you have two clear lows on a daily time frame on the NASDAQ. Price runs out the daily lows and it taps into a fair value gap beyond that level. As soon as this candle closes on a daily chart on Friday, May 31st, I know that the daily bias is likely to be bullish because it left behind these relative equal highs and smart money is showing a willingness or an unwillingness to displace price past these previous lows. So when I'm looking for a clear move from liquidity to liquidity, I'm looking for price to run out a clear liquidity pool. I'm looking for lack of displacement, and I'm looking to see price displace back up higher above the sell side liquidity. So as soon as I see this candle close, I know that price is going to start gravitating towards liquidity. Now, why is it going to gravitate towards liquidity? Why not just the imbalance right here? Because we have clear relative equal highs resting above there. So price isn't likely to just stop at the fair value gap here, but it's likely to reprice higher towards these two relative equal highs. So each day going in here, my daily bias is bullish on this day, June 3rd, June 4th, and June 5th. So I have 3 days where on the lower time frames, I'm looking to get in line with that daily bias, which is that price hits this high. Now, I already know why you're watching this video. You're watching most of you, not all of you, but most of you are watching this video because you want to know what the daily bias is. Okay, Dan, that's a crystal clear, cherry-picked hindsight example. What about once it hits the buy side liquidity? And the truth is, there is no daily bias once price goes above this high. So that's where you've been lied to. You can hear the thunder outside. This is where you're lied to, because as price is in expansion right here, there's no daily bias. You're looking for a clear one-sided narrative on a daily time frame where price is likely to expand to. Once it reaches this level of buy side liquidity and it's already at a all-time high, there's only a couple of things that price could do. It's either going to consolidate, which is a likely scenario, or it's going to reverse/retrace. And it's low probability to try and predict what's going to happen here once it already runs out that liquidity pool. If I'm a betting man, I'm saying it's likely going to consolidate because it's a sharp move up into a liquidity pool, right? Smart money's already long from down here. They're trying to either get out of that long position, or if it's at all-time highs, it could just keep on ripping. The only thing you could do when price is at all-time highs for daily bias is just keep on marking out the previous candle high and targeting that. That's the only thing you could do when price is at all-time highs. Besides that, there is no daily bias. Okay? So all you could do as price keeps on creating these open, low, high, close candles is just targeting the previous candle high. And once that hits, there is no daily bias. Before we do continue, if you guys would like to see more content from me, I have a Discord community where I share my thoughts on the market real time. I share where I believe the market is drawing towards on the higher and the lower time frame. So here's ES on the 5-minute from yesterday. You can see that we had this order block retest. I was telling Discord members I believe that I think the market's going to draw back towards the sell side liquidity, looking for this bearish OB to hold and send price lower. And you can see that it did deliver nicely into the lows. And I actually got 3 entries in here. The initial trade into the CE of the fair value gap. And then I was just pyramiding into the fractal market maker sell model. Also, there's 3 courses in here and also a library of over 40 videos. So if that's something you guys are interested in, there's a 3-day free trial link, which you could find the first link down below. Okay, remember, the goal isn't to have everyday bias, and that's where 99% of the information on this app is just kind of to cater to what most new traders want, which is I can go in every day and frame a daily bias. If you can't frame a daily bias, use the 60-minute or the 4-hour time frame. Treat that as a daily time frame. This is what ICT said. I'm quoting one of his tweets. And a whole new world opens up because there's much more opportunity there. Whereas on the daily time frame, it's not going to be clear. You're not going to go in every day and frame one of these 4. So that the hardest part you're going to have with daily bias is waiting for these 4 scenarios. It's the waiting element, because there is a waiting element that most traders want to avoid, but it's not realistic. I'm telling you, it's not realistic. I've been trading for 4 years now, and you're always going to have to wait for high probability setups. It's not just you turn on the charts and, oh, the daily bias, in 1 minute you figure out the daily bias, and it's like that every day. It's not always going to be a clear scenario, and when it's not a clear scenario, you wait until it is. Okay, and you either have patience or you got to forge it over time. Now, I showed you guys what liquidity to liquidity looks like. What about liquidity to imbalance? Okay, so we have these 3 previous daily lows in here. So on the daily time frame, this is on the NASDAQ right in here. You can see that we have this big imbalance. And the reason that I like this big imbalance right here is because we have this previous daily low, we have this previous daily low, and then this previous daily low. So I know when price trades down on Monday, June 24th, As price trades into this imbalance, it took out 3 lows in here. There's liquidity resting beneath there. Okay, so the only reason I really like this imbalance is because we have these 3 previous lows. This is liquidity. On a lower time frame, you'll see a more significant swing low. So I know once it takes this out, what is the market doing? It's either going to liquidity or it's going to an imbalance. So once it takes out liquidity, what's it going to do? It's either going to go up to an imbalance or it's going to go up for buy side liquidity. This is a scenario where price is running from liquidity to imbalance. So it's going to move from this area since it ran out a clear liquidity pool, which is these 3 previous days lows. It displaces back up. We're going to be targeting this premium fair value gap in here. Okay. So each day in here, Tuesday the 25th, Wednesday the 26th, and the 27th of June is finally when it hits into that area. So you could wait for this. You could wait for that displacement back up to target the fair value gap. Or once you get the hang of it, you'll just know this is kind of like a turtle soup in here where price runs out that liquidity. You're anticipating for price to reverse here, even if you're not trading it, right? I've been doing it for a while, so I know when it runs out these lows right in here, my daily bias bullish is going to start on this candle because it's likely to expand. But if you're newer, you can wait for that expansion back up from the 3 previous days lows in here, right? And I know it is a little bit further back. Usually you could look at the last 3 days, but I just like to look to the left side of the chart and see where clear daily lows are, clear weekly highs are. That's what's worked best for me. But yeah, if you're new, you can wait for this displacement back up and then these next 2 days target the imbalance right in here. Okay, that's the scenario. Clear liquidity to imbalance. And how do you know it's going to do that? You're waiting for a clear liquidity pool. You're waiting for lack of displacement beneath it and then displacement back up. And once it displaces back up after it runs out the clear liquidity, which is these previous day lows, it's either going to run for an imbalance or it's going to run for a liquidity pool. Okay, that's it. Now, imbalance to liquidity. Price moves into the imbalance. It takes out this previous day high. And on this day right here, as price is expanding higher in here, right, as you do this for longer, you start to just get a feel for it. Okay, and it's an experience thing. There's no fluff here. I'm not going to tell you that you could just come in here and just every single day, all right, it's definitely going to this imbalance. It's definitely going to liquidity. The key thing that I'm trying to instill in your guys' mind here is wait for it to be clear. Wait for it to be one-sided, like that's the narrative taking place. So as price is above this previous candle high in here, right, there's not going to be much of a bias. Sure, you could be targeting this previous high in here, but it did leave behind this previous low, right? And then we have this previous low in here as well, right? So once this candle wicks, right, once the imbalance hits, you go back to having no bias. Okay, then once it closes beneath this previous day high, it opens high, low, and close. You know that the next bias is likely to be what? It's likely to move from this imbalance here to liquidity. Okay, and that liquidity could be either the previous day low in here, or it could run back for this low. So once this fails to close over the imbalance and it takes out this previous high, it's going to move from imbalance now to liquidity. Why? Because it showed a lack of displacement above this imbalance. We have these 2 lows resting below, and it did an open high, low close candle, failing to close above that previous day high. So the next likely draw on liquidity is the low in here. So that was a high probability scenario where price is likely to run from a clear imbalance to liquidity because price failed to close over the previous day high. It's in an imbalance at an area where a retracement can occur. So it's likely to target this previous day low. So that's imbalance to liquidity. Now your goal shouldn't just be, just because you watch this video, to go in on Monday and apply each of these scenarios and think that you're going to be able to do it and frame high probability setups. It still requires the work on your end to go in and back test these different scenarios. That's what's going to give you the confidence. And over time, with lots of repetition, you'll see that, wow, this is really what the market's doing. It's just repricing higher for liquidity or higher for an imbalance or vice versa. So now let's go over another example where price is moving from imbalance to imbalance. Before we do that, I wanted to just read this again real quick. When is daily bias effective? It's effective when price is showing its hand in a strong one-sided narrative, clearly reaching for liquidity or clearly reaching for an imbalance. If it's not reaching clearly for something on a daily time frame, whether that be an imbalance or liquidity, It does not mean that you do nothing. It depends what's within your trade criteria. For me, it just means, okay, there's no daily bias. Let me now rely on a 60-minute or a 4-hour time frame for my higher time frame bias. Okay, so it doesn't mean I just can't trade anymore. I just know that I can apply that same fractal nature that the market has on a daily time frame on a 1-hour or 4-hour chart. If it's not clear, don't force it. So one more thing. Do not be a pattern trader with this information. Okay, if the market is gravitating towards a clear swing low on a higher time frame, just because it closed beneath a previous swing low does not mean the daily bias is bullish. Okay, so that's super important to understand. Now, let's go into a scenario where price is moving from an imbalance to an imbalance. And this is definitely a harder one because price is in this deep discount. We have this imbalance right here and price is wicking it. Once this candle gaps up here and it starts to expand back higher, okay, it's respecting the discount fair value gap. Price can then reprice higher to an imbalance here, okay? And then it closes below the previous day high and then it gaps down. So what's price likely to do then? Then it's likely to run for the liquidity. Price does not go down in a straight line. It does not go up in a straight line. So there's going to be these retracements along the way. This is the last thing that price will do. It'll move from imbalance to imbalance. Okay. So with all this information, right, today, what could we have done with that? Well, price retraces up. We have the daily swing lows in here, and price is wicking those daily swing lows and it starts to expand back higher. So my bias down here, since it took out a daily liquidity pool, is price is going to do what? It's either going to go up for liquidity or go up for an imbalance from that liquidity pool. So our bias until it reaches the imbalance is bullish. FOMC occurred on Wednesday, Thursday, right? So as soon as this daily low hits, my daily bias is bullish till it hits the fair value gap. Once this hits, what's resting below? There's more sell side liquidity resting below. Okay, so all of this, it leaves perfect relative equal lows, retraces back up. We have all of these lows to the left. The bias is still bearish. Price respects the upper end of the fair value gap, okay, and fails to close over this previous high. So since we have all these lows from the left side, it's still likely to get hit. I'm anticipating for the bias to still be bearish, and I'm just expecting this to be a retracement from liquidity to imbalance, and then it can move back from imbalance to liquidity. That's the only two things the market's going up or down for. So the bias can be bearish. Okay, opens up today. Again, the bias is bearish, and I did tell my Discord that the bias is bearish. The lows are too clean below for a reversal to occur. And what do you know? Today it opens up and it takes out all of that liquidity. So that's going to be it for this video. Hopefully this was insightful, and all you're trying to do is frame a clear narrative on the daily time frame. If it's not clear and it's likely to consolidate, will you rely on lower time frames for your higher time frame bias? That's going to be it for this video. Hopefully you guys found it insightful, and I will see you guys in the next one.